Hey there, I'm Julie Tam, managing broker of LYN Realty in Houston, and thank you for joining me today for Smarter Real Estate Weekly on Wednesdays. So I've taken a couple of weeks off from doing this video series. Oh, my light bulb just burned out. Anyway, because I've been extremely busy and just overworked lately. So took a little bit of a hiatus, but now I'm back and talking today about everything that you need to know about current real estate investing in the Houston area. Now, if you go back through the archives of my videos here on YouTube or Facebook for Smarter Real Estate, you will find one from a few years ago where I talk about how to look for a viable investment property in terms of the area, the price range, kind of the types of properties, and all of those types of things. Now, almost everything in that video is still relevant, except the pricing landscape has changed. In case you haven't heard, we've been through a pandemic and prices have skyrocketed for not only real estate, but for so many other things. And of course, being a big expenditure for a household, real estate is a big deal when the prices go up by this much. But what I'm going to discuss today is questions of what is the pricing currently for buying a property for rent, and also the associated costs of a rental property and how those costs have gone up and how they've changed. And is this the right time to buy? What should I do if I'm thinking about buying an investment property? I'll give you honest advice. I never give you anything less than that. Some people may try to be slick, used car salesman type. Well, no offense to used car salesman, but you know the saying, where they just, kind of really glorify real estate investing as just something that, everybody's just going to do and get rich and all this stuff. Well, what I'm going to tell you is, yes, you can make a lot of money through real estate investing. I've done it myself, but there is risk involved and there are losses involved, and you've got to take the emotion out of it and make it purely about business and business objective decisions, because otherwise you will have a hard time. So I'll go over all of those things. This episode is just packed with tons of information for you to learn and really consider as you are thinking about buying investment real estate. I will tell you that right now, it is so competitive. It is more competitive than I've seen it in my entire real estate career and possibly for a long time, for decades. I've been in real estate now for over 10 years as a real estate broker. And, it used to be when I was looking for investment properties for folks that we could kind of approach it like this. Okay, here's what we're going to look for, and I'm going to find some listings, and we're going to schedule some showings a few days from now when everybody's schedules align, and we'll go out, and then you'll pick your favorite property or two, and we'll submit offers and get some responses. And maybe there won't be competition, maybe there will be multiple offers, but we'll have a chance. Well, now, you can do that in some cases, but in most cases, when there is a great property on the market and it checks all those boxes for an investment, not just for an investment, but if someone wanted to occupy as an owner, you don't have that much time to act. A lot of times those properties go under contract the same day or the next day. In some cases, the listing agent will give you a few days. They want to receive the most offers possible and then let the seller decide. But in a lot of cases, the offers are just flooding in, so they don't want to even entertain any more offers. It's overwhelming. They may have 80 offers, and so they need to just make a decision within 24 hours. And so if you're not ready to go, it's just going to be a waste of time. It's okay if you're not a cash buyer. You still have a chance, but your chances are going to be slimmer unless you structure that offer in a way that just makes it just as attractive pretty much as a cash offer. And in a different video, I will talk about that in the future, how to do that. I've actually talked about it already in a past video earlier during the pandemic of how to be a competitive buyer, and also from a seller standpoint, how do you judge and pick the best offer. But having gone through now this pandemic for, the third year, and just seeing exactly, from a hands-on, firsthand experience perspective, I can give you even more tips in that regard. So I'll be doing a video about that as well in the future. Okay, so let's dive right in. When we're considering investing and the right timing and pricing, right? Those are all important questions that people have. Is this the right time? These are the same types of questions people ask about investing in the stock market. Because, as we see stocks, they're cyclical, but over time, if a stock is strong and the company doesn't go under, then the stocks are going to go up. And it really looks very much like this when you're talking about investments. Here's the price and here's time. So over time, the price will go up and down, but the overall trajectory from the beginning until the end and as we go into the future is that the price will continue to go up. So then your question is, well, I'm looking for, right now is the price like right here, and I would like for it to dip down and so that I can catch that dip and then invest before it goes up. But here's the problem. No one can predict the future, and so you can only make an educated guess. Like right now, for example, prices have reached their peak in many places. However, there are still markets around the country where prices are continuing to go up. And, in Houston, for example, because the prices are so high and interest rates are higher than they were at the outset of the pandemic, a lot of people are actually turning to rent. They want to rent single family homes instead of buy right now because it doesn't make as much sense for them to buy. So as an investor, you have to be thinking, well, does it make sense for me to buy right now? The prices are high and interest rates are high. But then of course, if a lot of people are looking to rent, that could be, a good thing for me as an investor. And I would say, yes, it is the right time to buy. Almost any time is the right time to buy, because here's the thing. If you think that, oh, maybe we're at a peak right here, I want to catch this. If you miss that and you don't realize that it's at the bottom, right, of this little area, it's not at the bottom because that was back here and we're not going back there most likely. And in Houston, over time, over the several decades that I've been alive on this earth, I mean, the prices haven't gone back down to what they were in 1980. I was actually born in 81, but close enough. And so what is going to happen though is you don't realize that it's hit the bottom of this little section and now it's climbing back up. And you're like, oh no, is it going to go back down again? Oh, sure. But now it's higher than it was at the previous peak. And so as you can see, if you don't time it just right and catch it, you may end up losing out. So what I say is, if you have the money and you want to put it towards something, invest now. You're not earning it in interest in the bank. Let me take a sip of water real quick. And so it is the right time, just like stocks. If you don't catch it now, then you may lose out on that opportunity. Okay, so in terms of the right time of year, we're talking about this is the right time in history to invest, right? Like, when is the right time? Because you know what, your property is most likely going to appreciate in Greater Houston, especially if you buy the type of investment property that we would be looking for you, which are going to be in more desirable areas with more desirable features and conditions and, all of those factors regarding the home. And so in that case, your property will most likely appreciate in value over time. So even if you did catch it, say on one of these little peaks, eventually it's going to go way up. And so you're going to have those gains. And then along the way, with your tenant paying off your costs, basically your mortgage and all your other holding costs, your taxes, your insurance, your HOA, repairs and things, that as long as you're pretty close to breaking even at this point, if you have a mortgage, then it makes sense. If you're paying cash, obviously you're going to have immediate cash flow and profit after any, initial make-ready cost that might be needed. And so we're really looking at this as a long-term investment. What I like to say is flippers, they, might think they're going to buy a property, put in some money, remodel it, and be able to sell it for more than what they put in. Like, that difference there is, their profit. But what I mean is they're going to sell it, and the profit that they're going to make is more than the money they spent remodeling it, is what I was trying to say in a clunky kind of way. So yes, you can do that. But the thing is that you didn't actually hold that property long enough. You maybe held it for just a couple of months in order to do the flip. And so you didn't actually realize any appreciation, because your appreciation really doesn't happen that fast typically. Also, you didn't enjoy any rental income. So what I like to say is, as an investor, you can still flip. You just delay the flip by many years, right? If you hold that property for 10, 20, 30 plus years, and then you sell it later, now it's appreciated by a lot. You've also made all of that rental income over the years. And so it just makes so much more sense. Okay. So talking about the right time of year. So kind of the general thing is that, people love to say, oh, spring and summer is a great time to buy because, all the houses are hitting the market. It's true, you've got more inventory because a lot of people are making that transition end of school year. They want to get their home sold, make the move during the summer before the next school year starts. A lot of people have kids. And so there's more inventory available for buyers, but there's also more buyers out looking. because they're also wanting to move at that time. So you have more competition. Whereas once the fall sets in, the school year sets in, you're approaching the holidays, there may not be as much inventory, but there's also not as much competition. So ultimately, it's really kind of a wash. It just depends on what environment that you're looking for. If you're a very competitive buyer, like you have amazing qualifications or you're able to pay cash, then sure, if you want to dive in and compete with all those other buyers, when there's more inventory for you to choose from, that may be the right time for you. But if you're not that competitive, maybe you do want to wait till there's less competition. Even if there's less inventory, all you need to find is just that one perfect home, whether it be an investment or to live in. Okay. I'm still advising people to stay as close to $200,000 as possible. Okay. You know, before, I think in my video a few years ago, if I mentioned price, I would have said stay under 200. But now the pricing has gone up to where maybe under 250,000 is the way to go. You may not be able to find an investment property that's closer to 200 or below anymore. That's going to be as profitable and a good, you know, financial decision. And so given that, think about that. That is still on the lower end. That's a below average price for Houston area. That means more people can afford those homes in terms of to live in. And also that's where investors want to be, meaning there's so much more competition. So you just have to be a very strong buyer. And I've talked about this in other videos about how to position yourself and what you need to do in terms of presenting yourself in the best light financially so that the seller will want to take your offer. So those are all still very relevant and important. I'm going to erase my whiteboard so that I can write down my next series of tidbits for you. And that is talking about rent rates and how those are catching up. So what I like to say is when you are looking at pricing over time, you know, as the home gets more expensive, so you can have like a cheap home down here and, you know, your price for sale. So I'm going to put SP, sales price. Your rental rate doesn't keep up as well. Your rental rate is going to do more of a flat line. This is very rough, a very rough sketch. And so R for rent. Okay. So that means you do want to have something where it's proportional. Okay. That this is on a lower price range. As you get higher and higher in price, the gap is much larger. And so your profit's going to go down. You're not going to have high enough rent to make it at that sweet spot as compared to the sales price. It'd be great if the rent is equal to close to about 1% of the sales price, rent being the monthly rent. So if you're going to buy a $250,000 home, you know, if your rent is $2,500, great, but most likely you're not going to get that in today's market. Maybe you'll get 2,000, you know, ish. And so as you get higher and higher though, if you're buying, say, a $500,000 home, maybe you only get $3,000 in rent. So you know what? The difference is getting larger. And so we tell our clients, don't buy an investment property that is too expensive. Okay, so that's another little piece of education. There is risk involved in all investments, just like in stocks. So when you're putting money into a property, there are months in which you will probably lose money, right? During those vacancies when you're not collecting rent, but you're spending money on make ready. But that's okay because you're investing in that house and then you're going to recoup that later. I own a lot of investment properties. My husband and I, and then I on my own premarital funds. And so we've seen it all. We've seen all different types. We have condos, we have houses, and mid-rise condos, and also individual condos in more flat communities that are like, you know, say 2 stories tall, for example. We have properties on the lake. We have properties just, you know, landlocked properties in all different areas, in the greater Houston area, all the way in Lake Conroe, in the suburbs, in town. We have condos in River Oaks, which is the most expensive neighborhood in Houston. So we've really seen it all, and we've seen all the different things that can happen, not just from our rental properties, but we manage over 300 investment properties for our landlords that live everywhere. They live all across Houston and all across the world. We have landlords from foreign countries that never even come to Houston. They just buy remotely, or some come for a visit and they don't come back again for a long time. And so what we're telling you is what we've seen statistically. and also anecdotally from our firsthand experience, which is really very valuable because you get a lot more nuance than just reading statistics in articles online, as we've had that personal experience. Okay, so we talked about rent rates and how they kind of match up with sales price. Let me talk to you about a little bit about the rent rate lag. And so as we saw prices of homes for sale going up and up and up, well, a lot of tenants are locked into leases, and so landlords can't change that pricing as long as the lease is still in effect. They have to wait until the lease expires, then can make a lease extension or lease renewal offer, increase that rent to get a higher rent. So there was a little bit of a lag, but rent rates have just been going up quite a bit. An average single family home in Houston area went up over 6% from July of last year, 2021, until just last month, July of 2022. And so it's catching up. And I think that, as rental properties are being competitive and there's, not as many available, people are renting them up, then the prices could continue to go up. We could continue to see that. I know at our company firsthand, because I'm actually in charge of doing the rent renewals, the lease extensions every month for everybody who's coming up for renewal as their leases are expiring. And so I am seeing that, about a year ago is when we started to just increase rent across the board. There was not one tenant not affected by the rent increase each month. And now it's slowed down a little bit where, last month I had maybe a couple of tenants that I did not increase the rent on because we already increased last year and it really wasn't supported this year. If they went month to month, then yes, we would increase to the market rent. But for a lease renewal of say 1 year, then maybe if there was no room for increase, then we would not increase. We always give a little bit of a discount in terms of off the market rent for someone who's renewing. Okay, let's see, costs, talking about costs. We've seen that firsthand too. What are your typical costs? You've heard of the classic PITI, and then of course there's also HOA and maintenance. And so with your mortgage, if you have a fixed rate, not an adjustable rate mortgage, then obviously that's just going to stay the same. Property taxes are based on the assessed value of your property in the county. So I'm talking about, Harris County, Fort Bend County, all the counties that are encompassing the Houston area. And so as the valuations have gone up by so much on properties, right? We've seen some properties, for example, like, even properties that I own, it's like let's say they were valued at 190,000 and all of a sudden it goes up to like 240. Okay. Well, that's a significant increase. That's insane. It's more than 25%. And so when you have that, then obviously your property taxes are going to go up, even if the tax rate doesn't change, because your assessed value has gone up. Assessed value is what the county is assessing. Of course, the market value could be higher. So if you decided to sell right now, you could, realize a handsome profit. And then insurance also has gone up significantly. I just had 4 different properties of mine. The insurance premiums get sent to me by my insurance agent, and they increased anywhere from about 50% to 66%, the latest one. That is quite shocking. But there are ways to mitigate those increases, which I can talk about in another video, by kind of structuring your insurance policy to maybe cover a little bit less on the dwelling, get the value down a little bit. And also say for the roof, for example, if the insurance policy, if the insurance carrier allows it, you could try doing actual cash value instead of replacement cost value. This is advice that the insurance agent gave me and that I've read up about as well online, but I'm not an insurance professional, so please don't quote me on those things, but I've done those for my own personal investment properties and they help to save me money on these insurance premiums. Okay, and then HOA dues, they're not skyrocketing the way that the taxes and insurance have been, but we have seen some increases as costs have gone up for maintenance. So if you are in a condo community or in a community where the homeowners association is, mowing the grass and doing landscaping or pool maintenance, pool supplies have gone up in price. And then, fuel surcharges have been tacked on. That's another thing we're seeing is maintenance costs are going up because your raw material prices have gone up. The cost for labor has gone up. And then some of these contractors are tacking on a fuel surcharge because gas prices have gone up. And so yes, costs are really going up across the board. And that's why we are able to justify the rent increases based on both the cost increases for the landlords, but largely because the market's dictating it. You know, tenants don't really care if landlords' costs have gone up. They say, you know, the market has to support a rent increase. Well, in almost all cases, it does support a rent increase. And so we are doing that. So what's the moral of the story? Yes, it is the right time to buy. It's almost always the right time to buy because there's different factors at play here. And because of that initial graph that I drew showing you that line just going up and up and up with the prices over long term, then yes, it's the right time to buy. So if you have any further questions, my video has been long enough. Hopefully it's really educated you. Please don't hesitate to reach out. Oh, I almost forgot I wanted to show you this. So because it's become so competitive to buy an investment property, what some of our investors are doing is they're waiting for one of our current investors, one of our landlords that we manage rental properties for, to sell their rental property. In some cases, the landlord just wants to free up capital for some other project they have, like maybe they want to buy a nicer house for themselves to live in, maybe they want to move overseas, maybe they need to fund their child's college education. So it doesn't mean that the property they're unloading is a bad investment, because some people might think, well, why is that person selling their property? If it was such a great investment, they would just keep it, right? Well, no, not necessarily. Like I said, there are examples of where that landlord wants to use the money for something else. And so we have landlords that are selling. And just a case in point, 2 examples just from this month. We had these properties. We've been managing both of these properties for a long time. And this is a single family house in the burbs in Spring. This one is a duplex townhome. So this unit, it's attached to the other unit. And this unit we manage in Northwest Houston. And so for our landlords, we were able to find other landlords that we already currently manage for, those investors, to buy these properties off of them. And it's a great opportunity because we don't have to compete on the open market. We have this property, we present it to our investor. If they want to go for it, they go for it. They have a limited amount of time because obviously the seller wants to sell, but then we can get it done at a little bit more relaxed pace. So I guess the moral of the story is if you are looking for investment properties, we can sure help you find them on the open market. But if we have a landlord that's selling, your chances are going to be better to be able to snag one of those opportunities. It just may not happen every day, but I mean, this year we've had already several landlords being able to capitalize on the price increases of properties, but also their need to use that money on something else. And then we have other landlords who have benefited from purchasing those properties. So if you have any questions, please feel free to reach out by sending me a message or commenting. And hopefully you found this video helpful, and it would be great if you would help me out by liking and subscribing, giving me feedback, and so that, you know, I can better tailor videos to what people are interested in. And I do appreciate all you viewers out there, and I hope you have a great week, and please join me again on a future episode of Smarter Real Estate Weekly on Wednesdays. I'm Julie Tam, Managing Broker of LYN Realty. See you later.